Dear students and working accountants, all are welcome to my Smart TallyPrime class YouTube channel. So my name is Babu Rao from Hyderabad, and sorry, till the last video, so we have discussed everything about Tally, Tally software, then everything about the companies, like creating the company. So in the Tally, we have to work means we have to work with a company. So all of everything about a company, and then in the company we have to record the transactions, means we have to record the entries in the ledgers, that is in the ledgers. So everything about ledgers, how to create single ledgers, multiple ledgers, all this, how to make alterations, that is altering the ledgers as well as deleting ledgers, everything we have learned. Now our next step is, so we'll go to the screen. So we'll go to the screen. Our next step is we have to record the transactions. So everything is made ready, that is all ledgers and all are ready. So now our next step is we have to record the transactions. So recording the transactions means recording the the transactions in the ledgers. So in the ledgers, when you want to record the transactions, how you record? What about the transactions? How do you know about the transactions? How do you know about the transactions? So for every transaction, there will be a proof, that is a base for the recording of the transaction. So that base or the proof of the transaction is called a source document. So every transaction will have a source document, will have a proof, or will have a base on the basis of which we can make the transactions. So for example, we purchased goods. Then how do you know about the purchases and all the details regarding the purchases? How do you know? So there must be a proof, there must be a document in support of the transaction. These documents in support of the transactions are proof of the transactions, or base for the transactions. That is, they are all called source documents. So in these source documents, the details of every transaction, that is every document, every document relates to one transaction. So in this, all the transactions details like date, parties, for every transaction there will be two parties. Our company is one party, others outside is one party. So there will be two parties. So the details of the parties, details is a name, address, if they are registered under GST, the GST registration number, their state, PIN code number, everything. All the details regarding the parties. Then details of the transaction, that is the details of the goods or services. If it is for any services, so details of the service will be there. If it is goods, the details of the goods, like the quantity, the rate, price, everything, and the tax charged on the goods, all these details will be available. Similarly, services, what is the nature of the service and what is the value of the service, the monetary value of the service, and on that, what is the taxes we charged, and all the details will be there. So on the basis of these what you call base documents or source documents only, we have to record the transactions. Without any proof or without any base document or without any source document, we don't know about the transactions and we cannot record the transactions in the books. So this is the use of the source document. See here, what is meant by source documents and use of source documents in TallyPrime. So how this one, and now we will go into deep and what are the different types of source documents in the business. What are the different types of source documents in the business and how these source documents are used by the parties. Every transaction will have two parties. So how these base documents or source documents are used by the parties. So now we will go to the details of the source documents. Generally, in every business, there are many source documents. In that, number one, the first document is bill or invoice. So invoice is the technical term used in the Act, GST Act, as well as in the Tally. That is the technical term. Generally, we call it as bill. We call it as bill or invoice. So that is the first base document. In this base document, or bill or invoice, in the bill or invoice, all the credit sales will be available. That is all the credit sales will be available in the invoice document. So that means for all the credit sales, this invoice or bill is used. Credit sales, for the seller, it is sales. For the buyer, it is purchase. So for sales means not only sales, for sales means for purchases also. So seller will sell, the buyer will buy. In this technical terms, in the GST is the seller is always called as supplier because he is supplying the goods, giving the goods. So he is called the supplier. Supplier means seller, seller means supplier. And the buyer is buying the goods, receiving the goods. So he is called recipient. Recipient means recipient of the goods, not only goods, goods or services. Supplier of services or goods. Similarly, recipient of goods or services, whatever it may be. I am giving some service. No, so I am the supplier of service. The other person, he will receive the services. He is called the recipient of the service. So goods or services, the seller is called supplier and the buyer is called the recipient. So in this, so invoice means from the point of both the parties, from the point of seller, it is sales invoice. From the point of buyer, it is sales invoice only. From the point of the buyer, he treats it as purchase invoice. Okay. So in this invoice, that is bill or invoice, only credit sales will be available in the bill or invoice. Only credit sales will be available. In that, the details is, the details will contain the date of the transaction when the sale took place, the date of the transaction. Then in that, the buyer's name and his details, like his address, his other, either his state, his address, his state, and what you call it as his registration number, that is GST registration number. If he is registered, if he is not registered, he is an unregistered person. Okay, these details and details of the seller. But generally in the invoice, on the top, the seller's name, the seller company name and address, everything will be printed on the invoice. So seller's details as well as buyer's details, both will be available in the details. It includes everything: name, address, is status, status is registered or unregistered. If registered, registration number, everything will be available in this document called bill or invoice. Okay, and then the details, then details of the goods, that is when the goods are sold on credit, goods or services are sold on credit, then the details of the goods or services also will be available in the what is the service given, or what are the goods sold, and what is the price, and what is the amount, and what is the taxes levied on that, charge the taxes, GST tax, charged. All the details will be available. And in that, one more thing is terms of payment. Terms of payment means the seller will tell to the buyer how to make the payment and when to make the payment. So you have to make payment through bank only. It may be a term, or you can pay cash or through bank. So that also, and also it is to be paid within a certain period. So if you pay within 30 days, it's okay. If you does not pay within 30 days, some 18% or 24% interest will be charged on the amount outstanding. So these are all called terms of payment. Terms of payments also will be available in this document. And again, and then, so this is generally, this invoice is for the credit sales. The invoice is issued by the seller. So from the point of view of the buyer, for the buyer, this is the proof for the purchase, and entries will be placed by both the parties on the basis of, whether it's on the books of the seller as in the books of the buyer. They will enter on the transaction. The entries will be made on the basis of this document. So seller will record it as credit sales, buyer will record it as credit purchases. So this is about the first document. And then the second document, cash memo or cash invoice. Here only invoice, bill or invoice. The second one is cash memo or cash bill. Bill or invoice, it is called as cash bill or cash invoice. Another name is cash memo. So cash memo and cash bill, both are same, and cash invoice. This is also issued by the seller. This is for only cash sales. The invoice or bill, it is for credit sales. Cash memo or cash invoice or cash bill, it is for cash sales only, for cash sales. So it contains all the details just like the invoice. By a date of the transaction, seller details, and the details of the goods or services, and the value of the goods or services, the GST charge on the goods or services. But it may contain, it will contain, actually it is cash sales. That is why it contains the name in the place where the seller buyer details are mentioned. There the cash will be mentioned. The cash will be mentioned, and their buyer's details also may be mentioned. Buyer details may be mentioned. All of the details will be the same thing, but terms of payment will not be there. Terms of payment will not there because cash is paid. Cash bill means cash is paid. So there is no payment of cash or payment of the money after some time. So terms of payment will not be there. In the invoice, terms of payment will be there. In the cash invoice or cash memo, terms of in terms of payment will not be there. All other details will be available in this. So in this, the seller record this on the basis of this invoice, cash invoice. The seller will record as cash sales and the buyer will record as cash purchases. In the case of invoice, you will record as, seller will record as, supplier will record as credit sales. The purchaser or the recipient, he will record as credit purchases. In the case of this cash invoice, the seller will record as cash sales, and the buyer will record as cash purchases. The buyer will record as cash purchases. So this is entries for the document. The entries made by the parties for the documents. So number one, credit sales, bill or invoice. Number two, cash is cash memo or cash bill or cash invoice. Next, number three, receipt. Stamped receipt, it is also called stamped receipt. It is also called stamped receipt. Receipt means if there is a credit transaction. So if the seller, a person sells goods on credit, that means the other person, the buyer, purchases goods on credit. So as per the terms of payment, after some time, the buyer, there is a debtor, seller is a creditor. The buyer has to make the payment to the seller. The buyer has to make the payment to the seller. So when the buyer is making payment to the seller, he may pay either in cash or by check. The through bank. Through bank means by check. By check, not only check, through bank means by check generally. In addition to that, by RTGS, by NEFT, by online transfer, net banking, by net banking, all these modes are available to pay the amount through the bank. So through the bank or cash, he can pay. Okay. In the case of cash payment, the buyer will make the payment of cash in cash, and the seller, that is the recipient, seller is the creditor. He receives the cash. He will receive the cash. So he will issue a receipt, means acknowledgement for the receipt. So date, when the amount is paid, from whom the amount is received, what is the amount, and why the amount is received against so and so invoice number, so received, and what is the amount, and signed by the authorized person, and signed by the owner, the proprietor or owner of the business, or accountant, or any other person authorized by the proprietor. So the generally proprietor will sign in this receipt. The authorized person, accountant, or others also can sign. So it is signed by with the stamp also. Sometimes if the amount is a large amount, we will sign on the stamp. That is stamped agreement. Stamped receipt it is called. Okay. So in this buyer details, all the details will be there. What is the amount paid, date of payment, all these things. This is called receipt issued by the seller to the buyer. When the buyer, that is a debtor pays the money to the creditor, that is the seller. Okay. And that is a source document. So on the basis of this receipt, the seller will record as a cash received. The will record as cash received, and the buyer will record as the cash paid. The seller will record it as receipt, and the buyer will record it as payment. So on the basis of this one. And the next one, another one. the next document as source doc. There are many documents. So this is also one. Another source document is check. Another source document is check. Sometimes, mostly the buyer, the purchaser will make the payment through check. I mean, through bank means through check. Through check he can pay. He can pay by other means also. But I am talking about check here. So in the case of check, so the check contains the date of payment, the contains the date and the to whom it is paid. Check is issued by the buyer and the payment is made to seller. So the seller's name will be mentioned and ordering the bank to make payment to so and so person, seller. So seller's name will be there, amount in words and amount in figure will be there, and the duly signed by the account holder means the buyer. So that the check is signed by others, it is not valid. It is to be signed by the buyer issuing the check. Okay, all this will be there. And similarly, this buyer, seller, after receiving the check, he will record in his books and he will deposit the amount in the check in the bank and he will get the cash to his account, isn't it? So on the basis of this check, the seller will, recipient of money, the seller will just like cash, a seller will record in his books as receipt of money, and the buyer or the debtor who is paying the money, he will record in his books as payment of money through this check. So the check details will be there. So check is also a document. It is also a document. On the basis of that, suppose if you issue check, so we'll check up to whom we issued all the checks. So that is the payments made. So we make entries as payments in our books. And we will see when the check is issued and deposited in the bank, we will have counterfile of the deposit slip. Counterfile of the deposit slip. So by seeing all the deposit slips, so these deposit slips means they are deposited checks in the bank. That means received from debtors and deposited in the bank. So by seeing that from whom it is received and we deposited in the bank. So all these persons we received from the, that is recorded as receipt from the debtors. So this is the, but that the check will be used. That is a source document. One of the source, there are many documents. This is one of the source documents. So number one, bill or invoice. Number two, cash memo or cash bill or cash invoice. Next, number three, receipt for payment and receipt of cash, and then check, and then check. And in addition to the check, they may pay through bank by online banking, that is internet banking or RTGS. Yeah, all these things we can pay. So if the amount is paid by check or any other means through the bank, there is another proof. That is, the details will be available in the bank statement also. The bank statement also, these details will be available from our point of view. If you receive anything from our customers, so that will be deposited in the bank. If it is check or otherwise, they will deposit in the bank directly. So that will be shown as the receipt for us. That will be shown in the bank passbook. That is called bank statement. We can see all the amounts received from others through check or by any other means directly to the bank. They may sometimes deposit cash also in the bank. So whatever it may be, this cash issued by us, we issue receipt, then that is the basis for the regarding the transaction. And bank statement will be, we generally record immediately when you get the check. We will record in the books and deposit in the bank. And the debtors, if they pay by any other means directly to the bank, then the bank statement will be the proof for us. The bank statement will be the source document. By seeing the bank statement, so whoever paid through bank directly, so that we will record. So this is the fourth one, check. And then this one, first of all, we issued, that is the seller, anybody, whether we may be seller or buyer, the seller issues invoice, cash in, for credit, bill or invoice, he will issue. Okay. And then for cash also, cash memo, I think will do. Suppose if the seller sells the goods and the buyer buys the goods, purchases the goods, if the goods are not as per the order or specifications, but the quantity is not correct, and any reason, the goods are defective, not as per the quality is not good, they are defective. In such cases, the buyer has the right to return the goods to the seller. So he may return the total goods or he may return only part of the goods. Some goods are damaged. So those goods he can return, or he can return the total goods. So in that case, it is called, see, when you sell the goods, so that is returned by the buyer, it is called sales return from our side. Because we sold the goods, those goods are returned to us, it is called sales returns. Then, from the viewpoint of the buyer, he bought the goods already, purchased, and then these purchased goods he is returning. So then he calls it as purchase returns. So sales returns from the viewpoint of seller, purchase returns from the viewpoint of the buyer. And for, see, when you are selling the goods, along with the goods, we will issue the invoice, and that invoice will be sent. When the goods are returned, what is the document? We are calling it sales returns and purchase returns. But what is the document to send along with the goods? That case, when the goods are returned to us, the return to us, that is the seller. The return to the seller from the buyer. The buyer will send the goods to the seller. So the seller will take that goods, and he will see why the goods are returned. So if the reasons are okay, he will accept them and he will take action on that. For that, this buyer, when sending the goods back, so he will send a note called debit note. Purchased goods. When I purchase goods, that other seller account is credited, isn't it? When I am sending back the goods, his account is to be debited. He is a creditor. So now we are sending back. So he is not a creditor now. So his account is to be reduced. So his account is to be debited. That is why it is called debit note. So in this debit note, the date, the details of the goods, the reasons for the return, and all the details will be available. Goods details, and what is the reason for the supply details, and when the goods are supplied. That is, what is the invoice number when the goods are supplied, that one, and all the, what is the reason for this. All this will be contained in the debit note sent by the buyer. So from the viewpoint of the seller, the goods sold are coming back. So it is called sales returns. So when the goods are sold, the buyer account is debited. Sales account is credit, buyer account is debit. So his account is debited. When the goods are returned back, he is giving to us, his account is to be credited. For that, he will issue credit note. He will issue credit note. His credit note is issued for sales returns. Sales returns, the credit note is issued. Remember always, remember well. You see the video again and again to understand. Okay. So the seller will issue a credit note. So the buyer will issue a debit note. The seller will issue a credit note, but saying that every details he will give. So he will accept, yes, your reasons are accepted by us. Like that he will say, accepted by us. So you are taking back, we received the goods back and your reasons are okay. So we are creating your account. He will mention that he will get amount, tax, everything. Then that not only amount, the GST also will be reversed, just like reversal. That will be called as credit note. Okay, understand? Now, the seller is giving credit note because the buyer is debited already. So to reduce, when the goods are written, his account is to be reduced balance. To reduce his balance, he is issuing credit note, creating the account. Similarly, buyer, when sending back the goods, he will, when the goods are bought, he will credit the seller account. Now the goods are returned, he will debit the seller account. Okay, not only this, even without any returns, without any returning goods, sometimes these notes will be issued. For example, when the buyer is purchased the goods, then there may be some defect or something, some problem in that. In that case, the seller, without sending the goods, the seller will say, don't send the goods. Okay, I will reduce the price. So without returning the goods, he will reduce the price. He will reduce the price, or he may give some discount. Okay, we will reduce the total price of the total goods, or I will give some discount. So whether discount is given or the price is reduced, everything. In any case, the seller account, seller is giving the facility, and the buyer account is to be reduced, isn't it? For that purpose also, he will issue a credit note. Not only sales returns, but also any discount allowed or any, I mean, what you call price changes in the price, that is reducing the price. Okay, that for this purpose also he will issue the credit note. In that case, he will write the details. Why this note is issued? So so much discount is allowed to you, or the price is reduced. For reducing the price, he cannot cancel the original bill and issue another bill. It is not the method. He has to issue the credit note. So his account is debited already. To the extent it is reduced, the price is reduced, a credit note will be issued. So in this, from the viewpoint of the buyer, he will get the credit note from the one. He will issue debit note for the any reduction in the price or any discount. He will issue the debit note since he will debit the seller's account. So this is called debit note, credit note. Sometimes I told you for sales return, seller issues credit note, buyer issues debit note. But sometimes seller issues credit note, but sometimes he will issue debit note also. Why? Because so generally sales returns or any price is reduced or any discount, the buyer account is to be reduced. His balance is to be reduced. That's why he is creating the account. Sometimes if the seller is not paying the money. So he said in this case, in the case of the invoice, there are terms of payment. Within 30 days you have to pay. If you do not pay within the date, within that period, we will charge interest on you. So he has not paid. So we will charge interest. For that, how do you do? How do you know? His account is to be increased and he must know that you are charging interest. For that, his account is debited. When the goods are sold, his account is debited. Now we are charging interest on that. So that is also he has to pay. Along with the goods, he has to pay the interest also. Again, his account is debited. Then we will issue debit note. So seller is issuing credit note for returns or any discount or reduction in price. And he is sometimes issuing debit note also. Similarly, the seller, the buyer is issuing debit note every time to reduce the balance of the seller. So when he has to pay interest, so the balance of the seller will go up. He has to pay interest along with the goods. So his account is to be credited. So not only debit note, the buyer will issue sometimes credit note also. Mostly seller issues credit note, but sometimes debit note also. Mostly buyer issues a debit note for the purchase returns or any other purpose. But sometimes he will issue the credit note also because for the interest he has to pay. Interest he has to pay. That means the balance will be going up. So his account is to be increased. So again credited. When purchased, credited. Again now credited. This is the debit note and a credit note. It is not only purchase returns, but for other purpose also. Similarly, sales returns. So the seller will record in his books as credit note, the reasons and everything. And the buyer will record in his books as debit note. Okay. Then this is the so first of all, from the beginning, what is that? First one is invoice or cash. Invoice or bill. Number two, cash memo or cash bill, cash invoice. And number three, receipt. Number four, check. Number five, debit note and credit note. And number six, debit note, credit note, debit note. And the last one, number seven, is voucher. Voucher is as not other bill. Don't think of it. This is actually, it is called as, in the business, it is called payment voucher. It is called payment voucher. See, for any transaction, there will be the source document. The bill will be there. For any transaction, not only goods, for other purchase or anything, for expenses also. Suppose we purchase the stationery, the shop person, he will issue a bill for the stationery we purchased. So we got the source document. That is the source document. Any bill issued. So that is called source document. So for every transaction, there will be source document. But sometimes for some expenses or some payments, there will not be any bill. For example, so tea expenses are there. For the tea expenses, the tea shop owner, he will not give any bill. So how then? But regarding the transaction, a base document, that is a source document, should be there. But without document, how can I record? For that purpose, where there will not be any source document or any bill. In such cases, the account voucher, it is called payment voucher. When you are making payment, you will write the voucher. Payment is called actually not voucher, it is called as payment voucher. The payment voucher will be prepared by the cashier or the petty cashier. cashier is paying large amounts, he will make the payment, and small amounts but petty expenses will be paid with a petty cashier. In all these cases, anybody, so this accountant will prepare the voucher, that is payment voucher. The accountant will prepare the payment voucher and it should be signed by the owner. The payment voucher will be signed by the owner or any responsible person. It is to be signed. It is to be signed. Signing means authorizing. So accountant will prepare. So prepared by accountant, he will sign. Prepared by the accountant, he will sign. Prepared by. And authorized by means it is accepted by the owner or any authorized general manager, for example, manager or partner. Any one of the partners can accept. Owner or owner means single owner, proprietor or partner. They have to sign with on the document called voucher. Okay. And in this voucher, definitely, first of all, date is not necessary. The date will be there. Then to whom it is paid and why it is paid. The payment details. Payment is a date and paid to any person. Why it is paid. What are the expenses? Why it should be paid? Towards so and so T expenses. Or to, let's call it T and like this. All this will be there. Okay. And without all these documents that I call it as source documents, without all these source documents, we cannot record the transactions. If you write any transaction without the source document, it is treated as fake. It is treated as dupe. It's all duping. Don't call it as what you call misappropriation of funds, like that. So without source documents, we cannot record any transaction. So this is the uses of all these different kinds of source documents, and it is a must for that. So before going to record, first we must get the source document. Then only we can record. Without source document, we can record. So we have to get the source document. So this is our topic today. And tomorrow we will take. So we got the source documents. Source documents we got. Then got many source documents. So which source document is to be recorded? Where it is to be recorded? Where it is to be recorded? See, that we will take up tomorrow. Okay, I will take it will be late. So we will take up tomorrow where these to be recorded. That is, while recording these source documents, they are called as vouchers. We will come tomorrow. And we have to select the correct voucher. When we are making the payment, we have to enter the payment voucher only. Payment record, we have to record as payment. Suppose if we record as receipt, it will be totally wrong. When making payment, but recorded as receipt, it is a problem. It is not correct. It is. That's why we have to select a correct voucher. Voucher in the sense that I will say, what is voucher? We just now we saw voucher. It is payment voucher. The voucher which I am selling is the voucher in which it is recorded in the books. In the books, we will come tomorrow, not in the manual accounting, the recording will be different, and in Tally, the recording will be different. The place where we record the transaction in the, what you call, in the ledger account, in Tally, it is called voucher. The voucher itself is a ledger account. Voucher we record, the automatically it is created as ledger. Okay, so tomorrow we will take up this. With this, we end this session today. And again, I am again requesting you, please you subscribe my channel and click the bell icon and select all so that you will get the information, that is notification for all the videos which I upload. Okay, then you just share my channel with all the other persons, with your friends or any persons who require the Tally accounting training, GST training, or who want to work as accountants or are already working as accountants but in ERP9, but they require the knowledge of TallyPrime. All these persons, you share that in, and then when you are watching these videos, every video watch till the end, don't skip, and then like the video, and after that you post your idea about the your idea about the video. It is called comment. So you post your comment, whether it is good or bad, whatever it may be, you post your comment in the comment section of the video, below the video in the comment section. then I will understand. So the comments are only the communication between you and me. For everyone cannot call and everyone cannot talk on the phone, etc. Cannot speak. Okay, that's why just you post without forgetting. You post your comment in the comment section. Okay, so with this we will end this and repeating this online classes, offline classes. If you want any online classes or offline classes, in addition to this separately, that I will take up. For that, you can contact me. My details are given, contact details are given in the about section in my channel. Okay, so with this, I stop this one and be careful and be happy, and you follow my channel and follow all the videos carefully. You will get expert knowledge and you will become a very perfect accountant. Otherwise, you just without much knowledge, if you go for accounting job, you are not called accountant. You are called as data entry operator, entering the sales and purchase. That's all. You are called as a data entry operator. So I want you to be a perfect accountant, but not a data entry operator. So wish you all the best, and you be careful and practice well.